All right, thank you everyone for joining us today in the Black Ops Trading Room. Right now we're going to go through some charts. I want to point a couple things out to you what's happening. As you know, the unemployment number came out and it was a little bit less than what they expected. And so now the question is, where do we go from here in the markets? Well, what you're looking at here is the silver futures contract. This is the March contract. ThinkorSwim allows you to put up the continuous contract by putting the forward bracket sign there and then just the symbol, and it will automatically roll it over to the near month contract. So anyway, this is a daily chart. I overlaid it with the itchy. You can see it. You see the Kumo cloud here, and you see your green T line and your red K line, first and second support in a bull market, and first and second resistance in a bear market. All right. We're at a crossroads here, as I pointed out in the video. Normally, lately, in this trend, we've had three situations where the silver will hit and test the red line, which is your secondary trend line support, and then bounce from there. And as you notice here, you have, I pointed out the three towers. The first one on here in the week of November the 12th, and the next one was on December the 7th, and then the next one was on 1/3/11. Alright, now I want you to notice something. Just give me a second. Okay, you will notice here that on the daily chart here, your green line, and it looks like it's getting ready to cross the red line. That is the first beginnings of a bearish sign. If these lines cross, that usually knocks prices down into the Kumo cloud. And right now, the Kumo cloud is at 2662 and 2492 respectively. So you have approximately a $2 trading range that silver will be stuck in once it gets inside of the consolidation cloud. Alright, this is a bullish consolidation cloud because the green line is above the red line, and we're in an uptrend. We're trading above the long-term trend line support. So here it is. Okay, we're also really having problems with this line here. And this is around the 29, we'll call it, we'll just say 29, between 29 even and 29.10. That is supposed to be the new support. However, if prices can't close above that today, then it's going to be an act as a resistance as we head into the cloud. Okay, like I just stated, the danger that you have here is this. Okay, basically you have a scenario where there's a chance that this could end up being a sort of a flush out dip, and these flush outs occur after a bear trap formation like the one we're seeing here. And if the formation holds, then prices should rise within the next 3 to 5 days after the corrective phase and the base is put in. If not, and the formation itself collapses, then prices will head back down into the consolidation cloud. This here is the consolidation cloud. This is your green A line, okay, in the cloud, and this is your red B line, okay. This green line is above this red line, and the trend is up. So this is a bullish Kumo cloud. If this green line was on the bottom and the red line was on the top, then you would have a bearish Kumo cloud. We'll get into more of that later, but just for right now, suffice it to say, prices are under mad pressure, and we do need to see a close today around the 29. I'll say 29 even and 29.10, somewhere around there. Let's just call it that. So that's pretty much where we're going to need to be. It'd be better. We would have a much better picture if we could close above the 29.30 level, because that's where major resistance is, and that's where most of the stops are going to be held on for those who are short. So it'd be nice to run those stops today by the close. Okay, switching our focus now over to the NASDAQ, and particularly the E-mini S&P. I'm sorry, the E-mini NASDAQ. All right, as you notice, the E-mini NASDAQ is leading the bunch right now. Okay, and currently we have a high so far of 2282 and a quarter, and right now we're sitting at 2280 and a half. Now you see this red line here. Okay, this is just an indicator to let you know that the market is now in the process of topping out. All right. If this market tops out, then basically here's what you're seeing. It's already trading at the resistance line now, and that's going to put it about the 2280 level where it's at now. Let's just call it 2280. How about that? We need to close above 2280 today in the NASDAQ. If we don't get that, then we're going to say this market's topping out, and it wants to head back down toward first support at 2243, which is about a 40-point drop, and then the next point there is at 2195. So that's where we are here. Now you may say, oh, this market's not going to do that. Well, look at this last correction we got here, when we failed to close above the resistance line. The prices bumped their head and got smacked back down. Okay, from here, and right here we were at like 2184 in the close, and we got all the way down here to 2083. So that's about a 100-point correction. So we could expect to see the same thing. Not saying that we're going to get a trend change, but we are looking at a correction to at least the first support, which is about a 40-point drop here in the NASDAQ. Prices can stay overbought or oversold for an extended period of time, a lot longer than most people can remain solvent. As you can see here, this red line lasted from around October the 21st until November the 11th. And then prices corrected a bit. So can it happen? Yeah. But just so you know where we're at, okay? And because the metals have pretty much been following the indexes for the most part, there's been some sort of a correlation. We can expect that if the NASDAQ does hold and closes above the 2280, it should take the gold and silver with it. That's just a natural thing. One thing I want to point out too real quick, let's see, pulling up the sheet. See, I don't know if you'll be able to see it. Let me just make it so that you can see it in the video. How about that? This is today's sheet, by the way. Alright, let's look at, I'm on the hit list, by the way, so let's see if we can pull up the NASDAQ and see where we are. Let's see. Alright. I try not to have that many securities so I can find stuff easier. But that doesn't always pan out. I see why. I had the bot checks selected. Alright, here we go. Okay, now if you look at the Dow, for instance, you see we have a lot of bot checks across the board today. Quite a few of them, and just about everywhere. So that lets you know that the market is bumping up against resistance. Okay, the bot checks, you know, they serve multiple functions because I programmed them to do a lot of different things. And one of the things it does is it shows when the market's maybe hitting some kind of resistance. All right, coming into today, you notice on row 61, I believe it is, on the under the hit list. All right, it's the NDX, it's the ticker symbol. You see we do not have a highlighted play here today. There's no swing trade, there's no day trade, and there's no pulse wave, right? When a sheet is all grayed out like this one, see how every column is gray like that? In a bullish market, in a established uptrend like we have here in the NASDAQ, if you scroll over, you'll see it right here. See the trend is bullish. You can actually go in and do like an off the cuff, if you will, day trade. And the way you do that is you buy the pulse wave breakout. All right, the pulse wave breakout is the only entry point you will use on the sheet when you do not have a signal, but you want to trade with the trend and possibly pick up, some small profits. That is your entry point right there. No other entry point on the sheet. That is it. Okay. Very high risk. You don't know how much you'll be able to pick out. You may be able to get a point. You may be able to get two. You may even be lucky and catch a bona fide rally. Like today, the NASDAQ rallied so far to 2282. And the low today was 2267.75, but that was done in the overnight while most people were sleeping, so you would not have had any way to catch that. But you see my point. So if you wait till the daytime, the day session, then you may be able to catch it. And the way you do that is you'll trade a breakout after the first, like I showed you the overnight, a breakout of the overnight high. You'll go ahead and you'll buy that in an uptrend. Okay. Now, when a big announcement of reports coming out like we had today with the unemployment, you do not step in front of that train. You do what you got to do. You wait until the report comes out, give it about 15 minutes, and then you make your decision to jump in. So here we are. Very tight trading range. We have a 10-point range in the S&P, and we have like a 70-point trading range in the Dow Futures. So not a lot of money is on the table at all. Nothing's moving anywhere. So you can only wait for a run at the highs. If the highs of the session are taken out, that's where you live. All right. If you want to try to get in there and do something, I would caution though on the precious metals, the silver, only because of what I showed you with the crossing of those lines. It lets us know that we could be seeing some type of corrective phase come into play. So I would follow the sheet. The sheet says pulse wave at 31.27. Currently we're at 29.23. Quite a ways from that. We do have a 2-bar Charlie at 29.60. So right now the high is at 29.30. All right. In other words, any lower price buy-in is risky because it may not have enough momentum to push the market higher after you get in. And you could end up buying the high of the day. So even if we break out of the 29.30, the risk is that we could fall back down and not even get up any higher than that. So that's why it's risky. Now, we don't have any bot checks there, but again, it is very risky. So you want to trade with caution, okay? The initial stop is at 29.81. All right, just so you know that. The initial stop is at 28.81. And we did hit a low of 28.32, but it doesn't look like we're going to close there. So we have a negative pulse wave breakout, but that's about it. And that's usually a base when the market doesn't close above it and doesn't get followed through. We usually reverse from there. So that's good news as far as sticking to the sheet and following the sheet. Okay. So if you're going to buy silver, you don't have a choice. You got to wait to 29.60 to get in there on the silver futures or the silver spot. Okay. So that's pretty much it for class today. So be encouraged and remember, take what you can and give nothing back.